Okay, let's unpack this. Imagine a world where a major political media company and a really prominent crypto exchange team up.
Right.
But not just partner up. They orchestrate this massive financial maneuver. Billions of dollars in digital tokens.
Audacious, isn't it?
Absolutely.
Yeah.
That's exactly what Trump Media, the parent company of Truth Social and Crypto.com, just announced. A staggering $6.4 billion CRO token treasury, funded primarily with company stock. Now, for you, the curious learner listening in, this isn't just another headline. It feels like a potential game changer, maybe a huge gamble, or perhaps both, for how corporate treasuries work in Web3.
Yeah.
So we're going to dissect every layer of this deep dive today. We'll go through the specifics of this Trump Media and Crypto.com plan, how it's funded, which is kind of unconventional, why it's generating so much buzz.
Oh, definitely.
The potential upsides, the really significant risks, and what this whole thing actually means for you and the broader crypto world.
And what's truly fascinating here, I think, is how this move doesn't just blur lines, it completely redraws them. You've got finance, politics, technology, all intersecting.
Right.
So our mission today really is to equip you with a thorough understanding of this complex situation, help you spot the opportunities, understand the dangers.
The deep-seated dangers here.
Exactly. And critically evaluate, is this a blueprint for innovation? Is it a desperate gamble? Or is it something else entirely? Maybe even sort of manipulative. We'll be connecting the dots, going way beyond the surface headlines to illuminate the implications. It's a story with many, many layers.
And right away, that makes me think about the regulatory tightrope they're walking. I mean, when I first saw this headline, the number alone, $6.4 billion. It's mind-boggling.
It really is.
But my next thought was, how on earth do you even fund something like that? Especially for a company like Trump Media.
That's the crucial question.
So let's jump right in, the big announcement. What exactly is this $6.4 billion CRO treasury play? And who are the key players?
Okay, so at its core, Trump Media, the company behind Truth Social, they've announced this plan to set up a massive $6.4 billion treasury.
Massive is the word.
But here's the key thing. It's not cash. It's not bonds. It's going to be composed entirely of CRO tokens.
Right. Crypto.com token.
Exactly. The native crypto of the Cronos chain and the whole Crypto.com ecosystem. And we're talking about a colossal amount here. It's not just an investment. It's clearly designed to have a significant impact, a market-shaping impact, potentially.
Wait, you said market-shaping.
And the participants, well, Trump Media, obviously, with its direct ties to a major political figure.
Can't ignore that.
And Crypto.com, which is, a huge name in the crypto exchange space. Global reach, major player.
So big names, big money.
It's definitely not a small investment. It's an audacious, calculated move. Could really redefine corporate treasuries in this digital age. It's about holding enough crypto to, exert some real influence.
Okay, that's where it gets really interesting, like you said, a market-shaping move. But is it genuinely for long-term stability? Or is it more about optics, short-term valuation, especially given where CRO is right now?
That's a fair question. CRO has been struggling a bit.
Yeah. And more to the point, how do you fund $6.4 billion? For Trump Media specifically, their finances have been under the microscope. It just sounds astronomical.
Right. And that brings us to the funding mechanism. This is probably the most critical piece for understanding the risks and the implications. It's largely funded through what's called an equity line of credit. An ELOC.
ELOC. Okay, what's that in simple terms? Is it like a loan?
Not exactly. It's different. An ELOC lets a company, Trump Media, in this case, essentially sell its own stock directly to an investor or a group of investors.
Sell its stock.
Yeah, over time, as they need the cash, up to a pre-agreed maximum amount. So they're basically leveraging their ability to issue stock to get the money for these crypto tokens.
Wow. So they sell stock, get cash.
And then use that cash to buy CRO. Presumably from Crypto.com or, related markets.
Okay, hold on. That sounds like dilution. Major dilution for existing shareholders, right?
Absolutely. That's the immediate, profound implication. Every time new shares are issued to buy CRO, the existing shareholders' piece of the pie, it shrinks.
So it's not borrowing against future earnings. It's selling off ownership.
Exactly. It's actively expanding the equity base to fund what is, let's be honest, a pretty speculative asset play.
So they're effectively printing shares.
Yeah.
Almost constantly, maybe, to buy this one specific digital asset.
That's a good way to put it.
Okay, that definitely has far-reaching consequences. Let's dig into why this matters beyond just the headline shock. What does this massive treasury play funded this way mean for the CRO token itself?
Well, first, context is key. The CRO token is already under considerable pressure.
Right. I remember the highs back in 21. It was way up there.
Exactly. It hit about, what, $0.90 late 2021, but today it's hovering around $0.10, a tenth of that.
Ouch. Big drop.
Huge drop. So it's seen a significant prolonged decline, lost a lot of value. Now, you introduce this massive $6.4 billion treasury funded by these ongoing stock sales.
You could see it as trying to prop up demand, right?
You could definitely see it that way, quite explicitly, actually. This sheer volume of buying power, maybe spread out over time, could be used to, stabilize liquidity, absorb selling pressure.
Oh, manipulate the price. That too strong a word?
It's a serious consideration. It could be used to deliberately manipulate the token's optics, its price, at least in the short to medium term. It's about more than just holding an asset. It's about the immense power that sustained buying from a big name can have on a token with a, let's face it, smaller market cap currently.
Trying to re-rate the asset's value, basically.
Precisely.
And it's not just finance, is it? This is politics meeting Web3.
Yeah.
Big time. Why is that intersection so significant here? Adds another layer of complexity, doesn't it?
It really does. It's a unique dynamic. Trump media is, inextricably tied to a major political figure.
Can't separate them.
And the timing. Regardless of what they say, it links directly to Donald Trump's 2024 presidential run. This isn't just some corporate finance move. It carries huge political weight, political implications, political risk.
So it forces these big questions.
Right. How could this legitimize Web3? Bringing this high-profile, politically connected entity in, giving it a mainstream stamp of approval, maybe.
Or the opposite. Could it politicize Web3?
Yeah.
Turn people off who liked its neutrality?
Exactly. It could alienate large parts of the crypto community. The ones who value that decentralized, maybe even anti-establishment feel. It just profoundly blurs the lines. Political capital, traditional stock markets, and this volatile crypto world.
A true confluence of forces.
Yeah.
Could set new precedents.
For better or worse, imagine a political announcement boosting the value of CRO. It's like a new kind of political market cap.
Wow. Where public sentiment isn't just votes, it's asset value tied to a political brand.
It could redefine campaigning, funding, influence, leveraging a brand beyond just fundraising.
It's that blend, that blurring you mentioned, which leads to the big question. Is this a blueprint for the future? Or is it a massive gamble, a cautionary tale waiting to happen?
That's the central question everyone's grappling with. On one hand, yeah, maybe it sets a precedent. Other politically connected firms, maybe even mainstream companies.
Could they try this? Using their stock to buy crypto?
They could. The innovation isn't just holding crypto, it's the ELOC funding, leveraging traditional equity to bridge into digital assets. Maybe struggling companies see this as a way to tap into crypto liquidity.
A sort of reverse acquisition model.
Kind of. Established brands acquiring digital assets funded by their own stock. Not just diversification, but direct engagement. But the political angle here makes it a much higher stakes game.
And the downside?
Well, if this stumbles, if CRO keeps falling, if regulators crack down hard, it becomes a stark, unforgettable, cautionary tale.
Highlighting the dangers of these leveraged, politically charged crypto plays.
Absolutely. It could chill interest from other traditional companies real fast. The outcome here. Definitely going to be a key case study for Web3.
Okay, let's play devil's advocate for a moment. Imagine the best case. Everything goes right. This audacious bet pays off. What happens to CRO?
In a purely optimistic scenario, if these treasury purchases are done skillfully, absorb a really significant chunk of CRO's circulating supply.
Creating scarcity.
Exactly.
Right.
Artificial scarcity. Combine that with maybe a boost in institutional confidence. Hey, this big entity is backing CRO now. That could drive a significant rally in the price.
So it changes the perception.
Right. It could reposition CRO, not just a struggling altcoin, but something more stable, more backed, more attractive to more investors. It would show that big corporate buying can turn the tide.
And what about Trump media itself? Beyond the token price, how does this help them strategically?
Strategically, it could be a powerful magnet, attract a new crypto-aligned investor base.
People already into Web3.
Precisely. Investors interested in both traditional stocks and digital assets. Could create a new, potentially very loyal shareholder base. Maybe more resilient to market swings.
And synergies with Truth Social.
Potentially. Given their user base, often early adopters, looking for alternative platforms, maybe politically aligned, this could be a smart way to integrate, cater to that audience already open to digital assets. Deepen engagement. maybe expand it.
So if this does work,
Right.
what's the ripple effect? Could we see more deals like this?
Oh, the ripple effect could be huge, transformative even. If it succeeds, it validates this model, accelerates adoption of new corporate token treasury strategies.
But not just political firms.
Not necessarily. Maybe across various sectors. Companies with unique market positions looking to engage communities differently. It could inspire more traditional companies to be bolder.
Seeing it as a legit way to engage, diversify, maybe find new funding.
Exactly. Bypassing traditional finance gatekeepers, maybe. It could spark real innovation in how legacy companies integrate with DeFi and digital assets. Broaden the corporate embrace of Web3 significantly.
Okay, that's the sunny side. But you flagged the risks earlier. That equity line of credit. It sounded like a double-edged sword. Let's go back there. The shareholder impact seems huge.
It is. You're right to focus on the ELOC. It's central to the risk here. Funding $6.4 billion this way means Trump Media has to issue a massive amount of new stock.
Not just once, but ongoing.
Continuously, most likely.
Yeah.
As they draw down on that credit line, let's try to make that tangible. Say Trump Media's market cap is around $5 billion now. To raise $6.4 billion selling stock, they might need to more than double the number of shares out there.
Double. Wow.
Yeah. This isn't just a little dilution, it's potentially seismic, a fundamental shift. Your slice of the pie shrinks dramatically. Your earnings per share potentially eroded, especially if CRO doesn't perform.
And the market has to absorb all these new shares.
Exactly. Without crushing Trump Media's own stock price, it's a constant pressure. If the market loses appetite for the stock, the whole funding mechanism could seize up. It's a huge gamble for existing shareholders.
And if Trump Media does end up holding that much CRO, potentially more than double its current market cap, what does that do to the token itself, to its tokenomics?
That's a monumental concern, probably the biggest risk for CRO itself. It creates a whale, a single entity holding a ridiculously large amount of the supply.
Remind us of the numbers again.
CRO's market cap, around $2.7 billion. The planned treasury, $6.4 billion.
So the treasury is more than double the entire market.
Exactly. It's like one investor owning more than double the company they're investing in. It could completely warp CRO's tokenomics. The economic incentives, the distribution, the scarcity, all potentially undermine.
How so?
Well, if they don't stake it or participate in governance, it's just this huge block of inactive tokens, distorts supply figures, maybe hurts staking yields for others, centralizes power.
Undermining the whole decentralized idea.
Right. And critically, if they manage it badly, or just decide to sell a big chunk, even for rebalancing, it could crash the market. Extreme volatility, maybe the total collapse.
Raises manipulation questions too, right?
Yeah,
Even
yeah.
if unintended.
Absolutely. The sheer size relative to the market depth just isn't there. Any large move could look like manipulation, intended or not.
Okay, sobering. And then the regulators. Equity, crypto, a high-profile political company. The SEC must be watching this like a hawk.
You bet they are. This is a regulatory minefield. The novelty of the structure alone is a huge red flag for regulators.
Combining an ELOC with a massive token buy.
Especially at the scale and with this political connection, it's largely untested, the SEC. They're highly attuned to equity market integrity and crypto asset classification.
So what are their specific concerns likely to be?
Several big ones. First, is CRO a security? If the SEC says yes, huge compliance headaches, maybe penalties for crypto.com, for Trump Media.
That's fundamental.
Then disclosures. How transparent are they about the ELOC, its impact? The crypto holdings. Holding such a large volatile asset needs unprecedented transparency.
And manipulation.
Given the scale, definitely. They'll watch to ensure the buying and selling doesn't unfairly hurt smaller investors or manipulate the price. Plus, the whole crypto regulatory landscape is still shifting. It's a massive gray area.
And not just a hurdle, maybe a brick wall.
Could be. Significant legal challenges, unforeseen headwinds. It adds a huge layer of uncertainty.
Okay, so regardless of the outcome, this move is showing us new ways companies are thinking about crypto treasuries, right? It's an inflection point.
It absolutely is. It highlights these new, maybe aggressive models. Traditionally, it was cash, bonds. MicroStrategy pioneered Bitcoin treasuries, holding the big liquid one.
But this is different.
Yeah, this involves a specific platform token, CRO, and funding it by leveraging equity. That's a different risk profile. It's an evolution in how corporate treasuries are being thought about.
Could spur more experimentation.
Could do. Especially if it shows any success. Other companies might see benefits in community engagement, new funding avenues, market differentiation. It forces a rethink of what a treasury can be in a Web3 world.
And It's more than just a treasury move. It feels political, intertwining with finance and crypto. How deep does that blurring go?
Profoundly deep. It shows how political influence, a public figure's brand, can be almost weaponized, maybe, to impact a specific crypto asset's value and adoption.
Financialization of politics.
It's a stark example. Political entities not just fundraising traditionally, but directly engaging with, maybe profiting from, volatile crypto markets. It could create totally new ways to back campaigns, measure influence.
Turning political capital into market value.
Potentially. Imagine a political entity with its own crypto central bank influencing an asset tied to its brand. The ethical lines, the regulations. It's a massive, potentially dangerous convergence.
So when you boil it all down, what's the core question you, the listener, should be asking?
The critical question is this $6.4 billion play genuine innovation? Is it a desperate gamble, or is it maybe manipulation?
Innovation.
Could it be a genuinely new way for a unique company to integrate with Web3, create value, engage users? Is it like other struggling firms turning to crypto as a PR lifeline? A last-ditch effort for a value boost amidst other pressures?
Or manipulation.
Given the scale, the politics, CRO's current state, are there elements suggesting an attempt to manipulate optics or price, intentionally or not? It raises huge ethical and market integrity questions for you to mull over. Where you land on that spectrum really shapes your view.
Now, this isn't the first corporate crypto treasury play. MicroStrategy and Bitcoin. What can we learn from them?
MicroStrategy was definitely the pioneer, aggressively buying Bitcoin, but their strategy was driven by Michael Saylor's conviction in Bitcoin as, sound money, a long-term inflation hedge, hold it forever.
Their buying moved the market, though.
Absolutely. Showed corporate conviction could influence price, especially in a bull market. So you might think, could CRO follow? But there's a crucial difference. MicroStrategy bought Bitcoin, the biggest, most liquid, most decentralized digital asset. Digital gold. Trump media. They're planning to buy a platform token, CRO. Smaller market cap, different utility, arguably more centralized, and funded by an ELOC.
So the why, the asset, the funding, all different.
Fundamentally different. MicroStrategy was about macro conviction. This feels more like a strategic play on a specific ecosystem token tied tightly to the Trump brand. The nuances matter.
And what about individual influence? Elon Musk and Dogecoin. How does that parallel fit?
Oh, that's a great parallel. Highly relevant. Musk and Doge showed how a huge celebrity or political figure's influence can fuel rallies, often completely detached from fundamentals or utility.
Driven by tweets, basically.
Pretty much. And those rallies, extremely volatile, highly susceptible to sentiment shifts, a single comment. That's a key lesson here. High-profile association can bring excitement, short-term gains, but also unpredictable risks.
Price tied to personality, not tech.
Exactly. Driven by sentiment, not development or adoption.
But not every crypto pivot works out. GameStop's NFT crypto attempt. More of a cautionary tale.
Absolutely. A very pertinent one. GameStop showed how struggling firms, meme stocks, sometimes leverage new tech more as a PR lifeline.
Trying to revitalize the brand, attract new investors.
Right. Chasing the buzz. But often the execution struggles. They don't deliver real long-term value. It's more branding than a fundamental strategic shift that fixes underlying problems.
Saying you're in Web3 isn't enough.
Not even close, especially if the core business is still challenged.
And finally, the really stark reminder. FTX. Stadiums, celebrities. All flash, no substance in the end. The lesson there.
FTX is maybe the most critical lesson. All those massive deals, the endorsements, it generated huge visibility, an aura of legitimacy, but it absolutely did not mean financial stability, sound risk management, or good business practices.
So don't confuse branding with strength.
Never. Especially in crypto. Don't confuse visibility, celebrity ties, political connections with fundamental strength, viability, or responsibility. The flash can hide deep flaws, even malfeasance. Look beyond the headlines, scrutinize the mechanics.
Okay, let's put some hard numbers on this again. Drive home the scale. $6.4 billion treasury versus CRO's current market size. Give us that comparison one more time.
It's stark. CRO's market cap, roughly $2.7 billion right now, the planned treasury, $6.4 billion.
So the treasury is more than double the market cap.
More than double the entire existing market cap. It's not just a big investment. It completely overshadows the asset it wants to buy. It's like one investor trying to own twice the company.
The power that gives them.
It's the power to dictate market conditions. I mean, if they decided to liquidate just 10% of that, $640 million, into a market that might trade less than $50 million a day sometimes.
Instant crash.
Dramatic crash potential. Far beyond normal volatility. It could shatter confidence, make CRO toxic for a long time. The visualization helps grasp the potential impact, good or bad.
And the dilution from the ELOC, you gave a rough estimate. Can we quantify that a bit more? How much stock are we talking about?
Okay, to fully fund $6.4 billion via ELOC, it's staggering. The exact number depends on the stock price when they sell, the ELOC terms. But basically, for every dollar of CRO, they sell a dollar of stock. Continuously over time. So imagine Trump media stock is $30, market cap $5 billion. To raise $6.4 billion, that's about 213 million new shares.
And how many shares are out there now?
Roughly 169 million, maybe. So yeah, potentially more than doubling the shares outstanding.
That's massive dilution.
Fundamental shift in ownership, shareholder power, constant downward pressure on the stock price, makes it harder to raise more money later. Existing shareholders could end up a minority, totally dependent on this crypto bet paying off.
In CRO's history,
Yeah.
You mentioned the $90 high versus $0 now. What does that tell us?
It tells us this isn't an investment into a token on a steady climb. CRO hit its peak in the 2021 bull run euphoria. Now, it's down almost 90% from that high.
A prolonged downturn.
Significant decline, waning sentiment. So the $6.4 billion treasury, it looks like a high-stakes attempt to either reignite that past glory, create artificial demand, or just stabilize a struggling asset. It adds another layer of risk. They're betting big on a turnaround.
Finally, the markets themselves. Can the exchanges, DXX and CXs, actually handle this? Does CRO have enough liquidity?
That's a critical, practical question. Do the exchanges where CRO trades have enough liquidity, enough buyers and sellers at different prices to absorb huge moves without massive swings?
What's the risk if liquidity is thin?
If market depth is thin, even a fraction of that $6.4 billion moving could trigger extreme volatility. Look at CRO's daily volume, often under $50 million. Imagine trying to sell, say, 1% of the treasury, $64 million into that.
The market can't absorb it gracefully.
Not even close. It's like an elephant in a kiddie pool. Massive waves, flash crashes, pumps, totally disconnected from fundamentals. Thin liquidity makes the token super susceptible to wild swings from the treasury's actions. A huge risk for everyone else in the market.
So, as we wrap up this deep dive, it's truly unprecedented. Consider this. Financial structures evolving, political figures engaging with new tech. Is the $6.4 billion CRO play a glimpse of the future, a blueprint? Or just a unique storm of risks and ambitions that might just blow up? What stands out to you, the listener, is the most critical takeaway here?
And if this deep dive into the Trump media, Crypto.com $6.4 billion CRO plan has helped you connect those dots, understand the layers, grasp the implications, then we really encourage you engage with this content. It helps enormously.
It really does.
Smash that like button, leave a comment, genius move, risky stunt, what are your thoughts? And definitely subscribe, hit the notification bell. Your engagement helps the channel grow, boosts visibility in the algorithm.
Let's just keep doing these deep dives.
Exactly. It allows us to keep bringing you these in-depth explorations into the biggest, most complex, sometimes most surprising moves in crypto and Web3. Your support directly fuels our ability to keep digging deeper for you.
So thank you for being part of our community of curious learners.